When it comes to realty, probably one of the top names in the world is Sotheby's. And we are fortunate to have one of Sotheby's best here today. A lot of people hear about these homes that are getting sold for millions and millions of dollars, record numbers. And sometimes you see the names of these individuals that are selling these homes, but sometimes you don't know who is the person that is actually getting these homes sold on both sides. Celebrities, stars have been flocking to Ben Moss for many years. He has a certain style. There's a reason why they're going to him, and we are fortunate to have one of the top agents in the United States, Mr. Ben Moss, here from One Sotheby's. Please give him a warm welcome.
Thank you, Jason. Thank you, Jason, for having me. I appreciate the opportunity to be in front of you all, and I know we're running a little bit behind schedule, so I'll try to keep it brief. My name is Ben Moss. As Jason said, I have been dealing with some celebrities for a few years now. I've worked with a few hundred of them over the years, and not just in South Florida, but around the country as well. And so it allows me to see what's happening in the real estate market across the country. I launched the sports entertainment division last year at One Sotheby's, which is the local affiliate here in South Florida and Miami-Dade and Broward counties. I'll talk to you a little bit today about the luxury real estate market as it relates to single-family homes and condos, and then I'll touch on the pre-construction market as well, since that seems to be a hot cocktail topic of conversation. So first and foremost, my thesis is that Miami is now becoming a world-class city. I've been here for the last 30 years, and I've seen it develop from a more provincial town into, I think, a world-class city on par with the Hong Kongs, the New Yorks, the San Franciscos, the Londons of the world. We all know that tourism is a mecca, but before we get into the real estate, I just want to touch on a few of the drivers of what is making and transforming the city. And by the way, I think we're halfway through the growth. I think there's many, many years ahead of growth here in the city, and real estate's a driver of it. But you may also not know that the banking sector here is the #2 banking destination in the United States after New York City. We've got 60 international banks headquartered here in Miami, and then we have over 100 alternative investment firms, the private equity firms, the venture capital firms. Historically, a lot of those firms operated out of Boca. When you thought South Florida private equity, you thought Boca Raton. Jason may have something to say about that, since I know that's where he's located. But we're seeing a lot of new infiltration here from the Connecticut hedge fund operators, the New Yorkers, coming in and setting up shop here in Miami. So that's a big part of it. Tax breaks. The state of Florida has very beneficial tax breaks, no state income tax, no estate tax for individuals. And when it comes to real estate, you've got the Florida homestead laws, which protect assets. If you're being sued, up to $10 million. They can take everything else from you, but they can't take your home, your primary homestead, if you establish residency in Florida, up to $10 million. You also have caps on the annual tax on your property as well. So you can't get more than a 3% annual tax increase for your primary property. Of course, we're a gateway to Latin America. Many of the Fortune 100 and Fortune 500 companies have regional offices here or Latin American headquarters. And then lately, we've been seeing a big push, public and private partnerships to establish a tech industry in South Florida. We see the Knight Foundation, Endeavor, and we see things like that happening in South Florida. A lot of the shared office spaces only for tech companies. So that's a big part of, hopefully, the future growth in South Florida. Obviously, from a population standpoint, we're the #3 state right now, according to the U.S. Census Bureau, and will continue to be for the next 20 years. And South Florida obviously sees a big infiltration of people coming and moving here as well. Of course, real estate itself is one of the big drivers of South Florida, the South Florida economy. During boom times, we have people coming in who vacation here, buying second, third homes. During bad times internationally, we have historically experienced flight capital. Now, that might start changing with the massive currency devaluations that we've seen recently, and I'll touch on that a little bit later. And then, of course, the lifestyle. We're all here in South Florida this time of year. I think there was a snowstorm in New York last week. So we know that real estate also is priced lower in South Florida relative to some of these other world-class cities. And so I think we see upside there as well. And not to mention the arts, the cultural amenities, the different languages being spoken on every street corner here. Those things are all adding to the climax here. So the next 3 slides, my point here is that we are, no matter which metric you look at, the luxury market, and as I define it, would be the $1 million and above closed sale properties, the luxury market has established itself at a higher basis already now, and has for the last couple of years, than the peak that we saw pretty much at every metric in 2006. So the first one that we'll look at, number of closed sales in single-family homes and in condos. And you see here, the line graph points clearly where the trend is. In the last 8 years, we have not quite, but nearly doubled the amount of closed sales above $1 million for single-family homes and for condos. All right, the next slide here. Let's look at the high sale price point. Up until 2010, we didn't really have any sales above $25 million for single-family homes. As a broker, I was always wondering, when are we going to start getting the Palm Beach pricing, coming down to South Florida? Because I always read about these sales for 25, for 35, $50 million happening in Palm Beach, seemingly all the time. Well, now we finally have that happening here. We have the titans of industry buying their primary homes here in South Florida and in Miami in particular now. So, for instance, if you look at 2012, you see that spike there. That was a new construction property, contemporary, 75-foot pool, Infinity Edge, private beach on Indian Creek. I'm sure many of you are familiar with Indian Creek. Several billionaires own properties there. But I also sold a $25 million condo last year at the Apogee, which is, if you look at the ultra-luxury market and you look at where sales are happening at these price points, the unit sold 2.5 years before I sold it for $12.5 million. A Russian billionaire bought it, didn't do anything to it except for pay the maintenance fees, and made over $10 million net at the end of the day just by holding a property in an ultra-luxury building. So it's hard to say where these price points are going in the future, because I never would have thought a $12.5 million unit would have sold 2 years ago for $25 million, but it seems if you're a billionaire and you want something or you have lots of money, you're going to pay for what you want, almost like a piece of art. And then the last slide here, as far as a metric is, we'll look at the average sale price per square foot. Again, you can see the peak. We had a little bit of a downturn, and the prices are back up. What I think is most impressive about this chart is that we've seen increasing price points despite the proliferation of closed sale volume that I mentioned 2 slides ago. So we've seen a big growth, and I think that just shows how robust this market has been in terms of this rebound. The next slide, that I just want to focus a little bit on the pre-construction market for you. So, I have here 2005 versus where we are today. One of the big differences, obviously, is on the deposit side. Developers across the board are taking higher deposits, 50% initial deposits from buyers, as opposed to 20, 15% in the last cycle. So that should be a little bit of a different factor there. But we're also seeing many fewer proposed condo projects. So I think a lot of the first-time developers, the rookie developers, have been flushed out. And now what we're seeing are more seasoned developers. I am very surprised at how quickly the cycle has come back with a roaring vengeance. But at the same time, I am a little concerned in some ways, and I'll talk about that in the next slide. But just a couple things here to note. Of the proposed units now, we have 38,000 proposed units in this town. I'm sorry, this is all of South Florida now, this slide. Whereas in the last cycle, we had 62,000 proposed units, of which only 17,500 actually got built. Well, in this cycle, there's a much higher percentage of what's proposed that is actually going to be built. As you can see, we've got about 16,000 units that will be built in this cycle, and about 62% of those are already sold out. So we still have a little ways to go. Many of the projects are already 100% sold. We've actually had 3 in this current cycle that have actually been delivered. So again, we have to look at areas, at price points, see where the buyers are coming from, but just as a global perspective. Another interesting thing, of what's being proposed in this cycle, 75%, almost 75% of the total building that's going on is happening here in Miami-Dade County. The balance is happening in Broward and Palm Beach counties. Within what's happening in Miami-Dade County, nearly 2/3 of that is clustered in the central business district. So let's call it Brickell, going up north to downtown Miami, the Edgewater neighborhoods just north of that, and then into Design District in Midtown. So it's really, really focused. And the cool thing is that it's driving growth, as I mentioned in my first slide, because you're seeing neighborhoods evolve. Similar to what you saw in Soho in New York, you wouldn't walk through the streets of Soho 10 years ago. You look at areas like Wynwood and Midtown and Edgewater, and you see similar dynamics happening where the people come, then the retail comes, then the restaurants, and then the buzz, which is kind of what we're seeing right now. And also, one other point is that of units that have been delivered since 2004 through 2014, we've seen annual average absorption of 4,700 units a year. So we've had a very steady absorption. And a lot of that is, on the condo side, as opposed to the single-family home side, is driven by whether it's excess capital or flight capital, but it's international capital coming in. So therefore, if I go back to the last slide, and you look at the average prices per square foot, you see that for condos, people seem to be willing to pay a lot more per square foot than for single-family homes, and that's a main reason for that. So where are we today? And this is just going forward here. My predictions, I could be completely wrong, but what I see, a couple things. First, on the single-family home side of things, I am talking to buyers, doctors, lawyers, entrepreneurs, people that are well off and well-heeled, who are struggling to say, well, I can buy $1 million, $2 million house, and I'm not even happy with what I get. So to me, that tells me that things are starting to change. We've seen annual average appreciation of 15% a year across the board the last 3 years. Certain markets have been higher. Pinecrest last year was up 20%, for instance. So, but we're also seeing an increase in the lag time, the days on market. We've gone from a 6-month level of inventory in the luxury market up to about 10 months, and that's increasing. And I think that will continue to increase. During the bust cycle, we had a 5-year level of inventory in certain markets, such as Pinecrest and places like that. Speculative construction is very prevalent. I also think that people are starting to discuss now, and I hear this from people who have owned waterfront properties, flood insurance. What's going to happen if all of South Florida mandates that you have to buy flood insurance? Well, that could tamper pricing down as well. And then, of course, the things, you're always one bad hurricane away, storm surge from the catastrophe, from our infrastructure getting inundated with water, things like that. So those are more outliers, but they're things that people are starting to talk about and things that we should at least be aware of in the South Florida real estate market. On the condo side, I do think that if you're a buyer, there may be a better time to buy a condo, quite frankly. And I'm telling this to buyers of mine, and maybe I'm leaving money on the table, I'm not sure. But I think in certain cases, if you're not ready to make a long-term decision, purchase right now, you may get a better deal when all this plethora of pre-construction condos hits the market, the psychology of which I think will be that a lot of people who, Canadian buyers, for instance, who have lost 30% of the value of their currency, some of them may not want to close on these deals or may not be able to. So there may be better opportunities to buy going forward. But again, I think the main takeaway here is that overall the city of Miami is growing. I think we're in a unique place and time right now, and from a real estate market perspective, there will be a down cycle or a topping out of prices perhaps, but I think that is a pause in the action and is actually good for the market and will allow us to then reset and move forward, and we've seen that happen in the last cycle. So it's an interesting time to be here right now.
Okay, let's give a round of applause to Mr. Ben Moss.